So, what happens when the world's second largest economy bans America's top chip companies basically overnight? Well, China's recent ban just wiped out billions for Nvidia and AMD. And this signals the biggest shift in the global chip war we've seen in years. This is Voice on Pages, where economics meets reality. If you love breakdowns just like this, make sure you subscribe. All right, let's get into it. And the shockwave? It was immediate and it was huge. We're talking a $30 billion drop in market cap for top US chip makers in just 48 hours. That is not a small dip, folks. That's a massive signal that the rules of this game have totally changed. But the real story here, the deeper one, starts when you follow the money. So let's dig in. What's really going on behind this billion-dollar ban? I'll tell you this much. It's about way more than just a single government contract. This is a flat-out battle for who controls the future of tech. Okay, so here's what just happened. China's regulators basically dropped a bombshell. They banned AI chips from Nvidia and AMD for any government use. But get this. The really fascinating part is which chips they targeted. We're talking about the Nvidia H20 and the RTX Pro 6000D. Now, why is that a big deal? Because Nvidia specifically designed these chips to get around the US export controls. So China isn't just banning the top-tier stuff, they're sending a message by banning the compliant ones too. And just like that, they've cut off access to a market where Nvidia had like a 95% share. It's a huge move. And to really grasp why this is such a massive, massive deal, you have to think about this one idea. AI chips are the new oil. Seriously, they're the fuel that powers literally everything in our modern economy. Data centers, financial markets, military tech, you name it. It's simple. If you control the chips, you control the 21st century economy. But look, this ban didn't come out of nowhere. It's not just a knee-jerk reaction. It's actually part of a much bigger long-term strategy. You could almost call it China's Great Chip Wall, a very deliberate plan to become totally independent when it comes to technology. And this has been brewing for a while now. It's been a real tit-for-tat escalation. It starts back in October 2022 when the US restricts exports of high-end AI chips to China. Then, a year later, the US tightens those restrictions even more, right after Huawei pulls off that surprising 7-nanometer chip. Fast forward to today, and we see China's ban on Nvidia and AMD. And what's next? A mandate that all new government data centers must use 100% Chinese-made AI chips. You can see the pattern here, right? Which, of course, brings us to the million-dollar or maybe trillion-dollar question. Can China actually do this? Can they really build their own advanced chip industry from the ground up, especially now that they're cut off from all the top Western tech? While the short answer might surprise you, they already are. And the proof is right here. Look at SMIC, China's top chip maker. Even though they're blocked from buying the best chip-making machines in the world, they are now mass-producing 7-nanometer chips. Now, just to put that in perspective for you, in the chip world, smaller is always better. It means more power, more efficiency. 7 nanometers is incredibly advanced. And we're not talking about some one-off experiment in the lab. These are real chips powering real smartphones, something a lot of experts thought was impossible under these sanctions. So China's strategy is pretty clear, and it breaks down into 3 parts: replace, retaliate, and rebuild. First, they replace Western tech by mandating homegrown chips, like Huawei's Ascend processors in all their state projects. Then they retaliate by controlling the export of rare earth materials that everyone else needs to make chips. And finally, they rebuild by funneling billions and billions of dollars into creating their own fully independent semiconductor ecosystem. But all this conflict between the US and China, it's created this huge power vacuum. And you know who's stepping up to fill it? A player you might not expect: India. This whole shift is happening because of a strategy everyone's talking about called China Plus One. See, for decades, the entire world's built its tech supply chain pretty much inside China. But now, with all the geopolitical risk and rising costs, companies are scrambling to find a plus one, another country where they can build their stuff. And India is raising its hand, making a very, very powerful case to be that country. And they are not messing around. They are absolutely putting their money where their mouth is. India has committed a staggering $18.2 billion to 10 new semiconductor projects. This isn't just some vague promise. No, this is a full-on national mission to become a global chip powerhouse. And you know what? The global heavyweights are paying attention. You've got Tata partnering with Taiwan's PSMC on an $11 billion plant. The American giant Micron, they're building a massive facility. Even Foxconn, the company that builds iPhones, is setting up shop. The biggest players in the world are heading to India. And their goal is incredibly ambitious, but it's crystal clear. Right now, India imports something like 84% of its chips. The plan? By 2030, they want to totally flip that script and get imports down to less than 30%. That's a huge shift from being dependent to being strategically self-reliant. So, why is India in such a good position to win here? Well, it's not just one thing. It's a perfect storm of advantages. First, the talent. A full 20% of the world's semiconductor design engineers are in India. Second, they're politically aligned with the US and the West. Third, the government is throwing out huge incentives, like covering 50% of the cost for new factories. And finally, they have a massive and growing domestic market that's hungry for all these new electronics. Okay, so let's zoom out for a second, because this isn't just about companies making money or about national pride. This massive shift in the global tech world, it's going to have a direct impact on you and on me. What round up? So what does all this actually mean for you at home? Well, if you're watching from the US, this whole tech split could mean your devices get more expensive, and we could see more supply chain headaches. But if you're watching from India, this is huge. It means a boom in high-tech manufacturing jobs, cheaper AI hardware, and a real shot at becoming a core part of the global tech supply chain. You know, Chris Miller, the author of Chip War, put it perfectly. He said that military, economic, and geopolitical power are all built on a foundation of computer chips. This is a fight for the world's most critical technology. He's right. This isn't about faster phones. This is a fight for the future. All right, so let's break it down one last time. The action: China bans US chips, seriously escalating the tech war. The reaction: the US loses billions while China doubles down on building its own industry. And the consequence: India emerges as a huge winner, pulling in billions in new investment. It's that simple. If you want more geopolitics and economics in plain language, hit subscribe before you go. So, which country wins the chip war by 2030? US, China, or India? Comment below. Support independent storytelling. Buy me a coffee. This is Voice on Pages, where economics meets reality.